Could Greece's financial woes adversely impact Bermuda?
There's no direct response in Bermuda, but there will be some impacts.
We put the question to economic commentator Jeff Brewer, the managing director of Anchor Investment Management Ltd, who believes increased volatility and uncertainty in the Eurozone, that is, the European countries that use the euro, could dampen the growth outlook for the global economy.
To be honest, I think it surprised a lot of people to see the no vote. But I think Bermudians in particular can probably understand after a 6-year depression that after a while austerity becomes everyone's worst enemy.
The biggest indirect threat posed by the Greek financial crisis is the island's currency, which could work against it.
To Bermuda, the largest impact is currency, because in general our currency is pegged to the U.S. dollar. And we get less competitive when the U.S. dollar gets stronger. And because of all the uncertainty in Europe, the U.S. dollar has strengthened significantly over the past year, and also it's accelerated today. And that if you're a tourist that's coming from Great Britain or Europe to Bermuda, is making Bermuda more expensive. So that's the largest impact in the short term.
And this possible currency effect could make Bermuda business less competitive in the long term.
A large business can either set up in Bermuda or it can set up in Switzerland or Ireland. When our currency gets stronger, it's cheaper for them to set up in other jurisdictions. So those are some of the impacts in the short term.
Or the larger impact could come if the current crisis results in contagion, which is defined as the likelihood of significant economic changes in one country spreading to others. Another worry is that Bermuda's debt problems could worsen to the extent of Greece, which has seen daily ATM withdrawal limits of 60 euros, banks forced to shutter to prevent a run on the banks, and the supremacy of cash.
From a numbers standpoint, Bermuda is quite different than Greece. One of the ways of measuring the level of debt a country has is comparing it to the GDP or gross domestic product of a country. And in the case of Greece, it's 170% of GDP, where Bermuda is less than 40% of GDP. So Bermuda is not anywhere close to their levels of debt.
But there are lessons Bermuda can learn from Greece.
Ultimately, Bermuda needs to get their debt under control. So Bermuda's debt has grown from virtually zero a decade ago to 40% of GDP.
As far as Greece leaving the Eurozone, Mr. Brewer says he initially would have predicted them staying, but after Sunday's referendum no vote, he concedes an exit could very well come.